Welcome to the Sciata Cyber Insurance Podcast, the show dedicated to helping brokers and agents master cyber insurance. We bring you top-tier experts from across the insurance and cybersecurity industries to help you better understand today's cyber perils and protect your clients from them. Now here's your host, Kingsley Flynn.
Thank you for joining the Sciata Cyber Insurance Podcast series. Our guest today is a good friend of mine, Scott Konrad. Welcome, Scott.
Thanks, King. Great to see you.
So a little bit of background on Scott. He is 45 years in the business, and his experience spans a number of disciplines. I won't give it all to you, but it includes experience working in claims. That's when I actually first met Scott back in the 80s. Sales, operational, specialty practice leadership, and Scott will get into that a little more on his role at Hub today, and a string of awards and accolades. Scott and I actually go back together to 1987 when a cell phone was a car battery with a receiver on it, the infamous bag phones, if you remember.
I remember it well. You were really proud to have that thing.
I was indeed, yes. Got to work at just carrying it around. He's worked with several of the world's largest insurance brokers, as well as with mainstream specialty insurers. Today, Scott leads a North American specialty practice for global broker Hub International that serves charitable organizations throughout North America. And that includes an audience of over some 21,000 entities, accounting for almost $3 billion in annual premium. It's great to have Scott today because although Scott's focus nowadays is on the nonprofit sector, he's been involved with cyber insurance since the very beginning, so he can bring us some practical knowledge on how to navigate this, at times, complex risk. And so over the arc of his career, he's worked with national retailers, banks, insurance companies, all kinds of risks, including a native tribal nation business with gaming and hospitality interests. So welcome, Scott. Good to have you with us.
Thanks, King. Great to see you again.
With that as an introduction, my interview today will focus on why small to mid-sized businesses, often known as SMB risks, don't procure the cyber protection they need. So my first question for Scott is, while you now focus on the nonprofit sector, what have you learned over the years relative to cyber?
Thanks, King. It's, again, great to be here today. Although there are certainly some operational and financial and even cultural differences between nonprofits and their for-profit counterparts, at the end of the day, cyber risk is still cyber risk. I think a lot of nonprofits, and for that matter, for-profit SMBs, probably tend to underestimate their exposure to cyber risk because they think that they're too small to be of interest to hackers. They don't realize that a surprising number of breaches actually happen from human error, just simple human error. It's not external predators. They don't realize that as owners of their data, they are strictly liable for its security, regardless of who they might consign it to externally. They think that their IT systems and protocols are the cat's meow, that they're absolutely invincible. And I think lastly, they think that an external services provider, whether it's a credit card processor or a web-based CRM storage firm or an IT consultant or a SaaS provider, they think that that external services provider is automatically going to take care of any problem. I wouldn't bet the farm on that.
No, and we've heard from other folks the fact that they think they're too small for needing cyber insurance. So you make some great points there. There's been some confusion over the years of what constitutes a breach. So can you provide us with a view and maybe even a live example?
Sure. Well, the law actually is what defines a breach. And the problem here is that here in the U.S., you've got 47 or 48 different state laws that are in play, no two of which are the same. Now you compound that with GDPR and the laws of other countries, and now you've got a real spider web of conflicting laws and responsibilities. The federal government here in the States has not taken ownership of this problem. I learned some years ago that in the event of a breach, the governing law is the law of the affected party's domicile. So in the event of an organization that's doing business across borders, which most do, that could actually trigger multiple laws. And you've got a plethora of attorneys general climbing up your backside. So that's a real challenge.
So if I'm standing in the shoes of a client, let's say I'm your client, and I'm looking at, okay, do I really need to procure standalone cyber insurance? Well, I might say, Scott, I've got a business owner's policy, a BOP policy. I've got a GL policy, and I've got a property policy, and maybe one or several or all of those policies might cover my cyber risk. How would you respond to that?
Well, the state of the art in insurance policy construction has certainly changed over the years. But even if we go back to the frontier days of cyber, those other policies, the property policy, the general liability policy, the D&O policy, the crime policy, for example, each provide smidgens of coverage here and there. But there are also some coverage problems. So without getting too far down into the weeds, look at a property insurance policy. That policy is premised on having direct physical loss or damage to covered property by an insured peril. So I've said three different things: direct physical loss or damage, covered property, insured peril. You have to have all three of those things satisfied in order to have coverage. So now if we dissect it a little bit further, is data covered property? Is a breach an insured peril? Was there direct physical loss or damage? Those are the acid test kinds of questions for a property policy. If we go over to a general liability policy, that policy is going to cover civil liability for bodily injury and property damage and personal injury. Personal injury is things like libel, slander, defamation, invasion of right of privacy, some other things. In a network security event or a data breach, is there bodily injury? Probably not. Was there property damage? Probably not. Certainly a question mark. Now, a breach might constitute one of the personal injury coverage triggers, invasion of right of privacy, but most underwriters have wizened to that loophole, and they've now strapped in absolute cyber exclusions. They just don't want to be paying for anything that's data-related, cyber-related. So we're starting to see that happen in some management liability policies as well, directors and officers liability. If you think about crime coverage, a commercial crime policy may cover financial loss from fraudulent impersonation, which we have this cutesy term, social engineering, or it'll cover financial loss from computer fraud, but it's not going to help with damage to your equipment or digital assets or any ensuing business interruption. So I hope this isn't too far down in the weeds and technical, but the bottom line for any buyer is that the only policy that really treats cyber risk holistically is going to be a freestanding specialty placement, a purpose-built policy, if you will.
That's very helpful. And you mentioned earlier that coverage may not exist in other policies outside of cyber. You've mentioned some of the initial pushback clients might give you or might push back on regarding the need for cyber. But perhaps you could offer any other advice on approaches that you use to overcome a client pushing back on you, saying, I don't need cyber.
Sure. Well, let's face it, nobody wants to incur a new expense line item if they can avoid it. But we do know from the headlines that even the biggest of organizations, up to and including the federal government, aren't invincible, despite legions of IT staffers. They've got ginormous IT budgets. But as the bumper stickers say, stuff happens. So if an organization really does have its act together, its business partners may not. In the last string of breaches that my clients have been involved with, every single one involved something that happened outside my client's own IT network. It may have been one or two steps removed, some contractor on the outside. So then we get to the question of the contract with the external party. If they've contracted with somebody to do the credit card swipes, for example, or to be storing data in the cloud, what does that contract provide for? If the service provider, the external service provider screws up, what's it going to do for the client? Will it hold them harmless? Will it indemnify the organization? Are there exceptions to that covenant? Does the contractor have the right kinds and amounts of insurance to do the job? What about in the event of a large-scale breach, something like an Equifax or a Marriott or some mega breach that affects the majority of its clients? Then is there enough insurance to even go around to all of their clients if there's a breach? I think more and more we are learning that it's no longer a question of if something will happen, but when and how bad it's going to be.
Very helpful. So you've identified a number of areas where the client is pushing back. But let's get into trying to place cyber insurance. And you've identified earlier some issues, but what are some of the common breakdown points, if you will, in the selling process? So let's assume you've overcome some of the client objections, but now let's get down to you're, as the broker, going to the market to place the insurance. Can you share a little bit of where some of the breakdown may occur there?
Great question. Let me share some experience. To start with, this cyber policy application process is pretty cumbersome. I say it's about as much fun as getting a root canal, but without anesthesia. So the challenge for agents and brokers, I think, is that not all of the questions on a cyber application, which can run 2, 3, 4 pages, paint the full picture. These applications are full of yes or no questions. Do you do this? Yes or no. Do you do that? Yes or no. But not everything boils down to a binary answer. So we're encouraging our clients to elaborate on the questions that are in the gray areas by attaching an addendum to the application and maybe cross-referencing back to the specific question or questions. We'll get sometimes the buyer and underwriter on a call together to talk through the submission. Because at the end of the day, our job is to eliminate surprises. And it's amazing what can happen just by getting the parties together and promoting a comfort level so that the underwriter says, yeah, this is a risk I'm comfortable with. I can write this at an acceptable price.
That's a great recommendation. Getting people either face-to-face or at least on a call or a Zoom call to kind of walk through. And are there other factors in the, if you will, the application process that the client needs to be aware of, that the broker should be highlighting with them during this process of submitting an application?
Well, again, the state of the art on these things has changed. Beyond the application itself, a lot of insurers are now using special tools to gauge the quality of a risk. So they're doing, for example, a discrete network scan that looks for open ports and other vulnerabilities. The buyer may not even know that the insurer is doing this stuff. So while the process itself and the resulting report card that the client gets are intended to be constructive, some buyers may feel it's intrusive, especially if they're learning about it after the fact. So I think it's a good idea for the broker to explain to the buyer how that risk assessment process is going to work. It's not all just about the application, and then pave the way so that nobody's surprised. I look at this a little bit like an employment application. The fine print at the very bottom of the application, right where you sign your name as the applicant, gives the employer the right to do background checks and things like that. Well, I'd have to go back and look at a cyber app, but I'm guessing that there's some language in there that authorizes the insurer to do some further work. It's a good idea to just point that out to the buyer right up front.
So setting expectations for the client, very important, right?
Absolutely. Our business is about eliminating surprises. That's where it's at.
Okay, no, that's great. Particularly like things like scans, because as you said, the client might find it intrusive. Why are they doing this? And make sure that the broker can set the stage, if you will, for the client to better understand that. Scott, your insights into how the client thinks and how a broker or agent can better support them is just terrific. And I like the fact that you're not a cyber specialty broker. You bring some practical experience that will be very helpful to agents and brokers as they navigate this complex world of cyber insurance. So I want to thank you for taking the time to visit with me today, and wishing you all the best for a successful 2023.
Thanks, King. It's great to see you again, and I've certainly enjoyed the conversation. I hope that your listeners will get some mileage from it.
Thank you again.
Thanks for listening to the Sciata Cyber Insurance Podcast. Join us next time for more insights that help you understand and place cyber risk better. If you want to grow your cyber book without the heavy lifting, you need Sciata. Sciata is the online marketplace where you quickly quote and bind cyber from leading markets, all on an easy-to-use digital platform. Go to Sciata.com to learn more. That's SAYATA.com.